Hello, friends, and welcome back. Now we are about the reading on machine learning. So up to now, the two approaches to forecasting the Y variable we talked about was multiple regression and time series analysis. Now both of these approaches rely on linear relationship between Y and X. There are some non-linearities that we are able to overcome by taking natural log of one or more variables, but otherwise the limitation of the approaches that we already talked about is it does not accommodate non-linearities, and we see significant non-linearity in financial and economic data. So we have more advanced set of tools, and that is what this reading is all about: machine learning. All right, so two LOSs being talked about. First, let's define what is machine learning. Machine learning is basically letting the machine find a pattern in the data. So instead of specifying the relationship between X and Y, sometimes in unsupervised, and we'll talk about that in a little bit, in unsupervised where there is no Y variable, the machine will find a pattern and convert that raw data into useful information for the analyst, for the researcher. So the objective is to determine structure or pattern without human intervention. Now, one straightforward way, easy way to understand what machine learning does is it finds the pattern and applies the pattern to generate forecast. So find some meaningful, useful information in a data set. That's what machine learning is for. Now, supervised machine learning uses labeled data, labeled training data, which is basically the sample that is used to estimate the model. So label means what? Well, label specifically here in this context means we clearly identify the Y variable. Now the label that we are going to use, the term we are going to use, is called the target variable. So instead of variable, we use the label. features. Instead of x variables, we use the term features, and for y variable, we call it the target. So nothing fancy, just it.
Okay, I'm watching this on 1.5x speed because I listened to it last night, but it was towards the end of my study session and I didn't make notes because I was so tired. And then I've got two of these. So I forgot Lena this morning. So when I was doing my 6:30 to about 7:30, 8 a.m. Study session, I couldn't use this book, so I didn't want to pick up this video. So I did a quiz instead. So the quiz is supposed to be an hour, 30 minutes. I did mine in 45 minutes, and it's on quants, the regression part. I got 50%. I took 45 minutes and then I was doing corrections. That took me about 20, 30 minutes. And then that was my whole study session. But I regretted doing that because it showed me flames. And yeah, so that's why I'm listening to this in 1.5 speed. When I'm doing the regular one, I listen at 1.25 because it's the first time engaging with the material. I just wanted to explain that. Hi, Mixstick. I hope you guys can hear me because ndifake endweni apa to hold my phone. So I hope I'm audible.
New set of terminology for you to be on top of. So once again, label is where we have the target variable identified, and that is what supervised learning is all about. Now it can be of two kinds, where the data, the target is either a continuous or categorical. When the target is continuous, then we use regression model. Notice that just because a model is linear does not mean it does not form part of machine learning. Machine learning includes linear as well as non-linear models. If the target is not continuous, but rather categorical, then we use a classification type algorithm to generate our forecast. Now, unsupervised machine learning does not have label training data. In other words, the y variable or the target is not identified, is not defined. So it is basically a set of variables that are thrown into the software, and you're asking it to generate some sort of pattern in the underlying data. Now there are different types of algorithms depending on what our objective is, and we'll talk more about it when we go through the types of algorithms that are unsupervised algorithms. All right, so supervised, we have labeled training data, meaning there is a clearly identified target variable. Unsupervised, where the training data is not labeled, meaning you don't have a defined y variable, so there is no specific, this is y, this is a series of x variables. All right, deep learning is a type of algorithm that is used for very complex tasks, such as classification, speech recognition, natural language processing, and so forth. reinforcement learning algorithms basically learns by itself by using the output of their earlier iteration as an input. So basically, it learns from its own mistakes. All right. Now, this slide is kind of out of place, and it is, when I say out of place, meaning it is there in the curriculum exactly within this LOS, but we still don't know what these labels or what these terms are, penalized regression card, and so forth. So it makes sense for us to really use this information later on after we have clearly defined the types of supervised slash unsupervised algorithms. However, one thing I want to talk about here is that if the data set is too complex, then we use what is called as a dimension reduction algorithm. So data is becoming cheaper. It is easily available in digital form, and so sometimes a researcher may be tempted to basically throw as much data as possible to the machine and tell it to find a pattern. The problem with that is in multiple regression, when we talked about multicollinearity, we talked about noise variables or variables that don't contribute to the explanatory power of the model. The same issue arises here, where those extra variables are not doing much to help us in the task at hand, but is contributing to model error out of sample. So dimension reduction is, you have 25 set of X variables, you want to reduce it to maybe 5 or 6. And there are sophisticated algorithms that do that so that we are now focusing on the pattern and not focusing on the noise or randomness in the data. All right, so let's look at a couple of multiple choice questions from the curriculum, 5 or 6. And
Let's go. Let's go. Hey, Melus is a hater. Melus is an enemy. Let me get dinner and start cracking the coursework on study itself. I bought a full chicken paella at Pedro's. I had 2 pieces for lunch, and then I forgot to take it home with me. So my dinner is probably just gonna be boiled eggs.
are sophisticated algorithms that do that so that we are now focusing on the pattern and not focusing on the noise or randomness in the data. All right, so let's look at a couple of multiple choice questions from the curriculum. Which of the following best describes machine learning? And the first choice just says just for linear regression. That obviously is a distractor. The second choice says it is a set of algorithmic approaches aimed at generating structure or predictions from data. So generating structure is basically another way of saying we have an unsupervised learning, and predictions means we have supervised. And using those rather loosely in this context, as we'll see later on, but that is what they are basically throwing at you in terms of very complex wording to say we are basically machine learning is a set of algorithms that can analyze data without human intervention by finding a pattern and applying the pattern. And you see this statement over and over again. So find pattern and then apply the pattern, obviously. And so that is indeed your correct answer. Choice C says it is a set of computer-driven approaches to extract information. Again, the label
doesn't have to be linear.
So there are two concerns here. It doesn't have to be always labeled. That's why we have unsupervised learning. The two incorrect words in this last distractor is it specifies it is only for linear, and secondly, it specifies it only for labeled data set. Moving on, the next example, which of the following statement is most accurate when attempting to discover groupings of data without any target or y variable? So when that is the case, when you don't have labeled training data, then you use unsupervised learning. So choice A is your correct answer. Choice C basically mislabels the algorithm to be used as supervised learning algorithm, and so an algorithm that is given label training, well, the data does not have a target variable. Well, how are we going to assign a target variable randomly to my data? So choice B is also incorrect. So choice A is your correct answer. Right, moving right along. Which of the following statement concerning supervised learning best distinguishes it? So contrasting supervised versus unsupervised learning. Supervised learning involves training on labeled data to infer a pattern-based prediction rule. Choice B says supervised learning uses unlabeled data, so that removes choice B. And choice C says learning again from unlabeled data. So obviously
can't be supervised if it's unlabeled.
And the correct answer is choice A. All right, let's look at the last example. And the last example, which of the following best describes dimension reduction, meaning we are seeking to reduce the number of features used in detecting the pattern in the data. So dimension reduction focuses on classifying observations in a data set into known groups using label training data. That is not true. Focuses on clustering observations into unknown groups. And so choices A and B are basically
supervised versus
talking about
unsupervised.
algorithms that does classification using label training data or unlabeled training data. So supervised versus unsupervised classification. Well, that is not what dimension reduction is. The dimension reduction focuses on reducing the number of features. So you want the explanatory power of the model to be good, but it should not mean it explains randomness or noise in the data. We'll talk more about that, and it is a very important concept within this reading. So choice C is your correct answer. And that brings us to what we were talking about, a very important concept, that is overfitting. So first of all, the term generalization, as it is used in ML, refers to the extent that the ML model, machine learning model, is able to generate accuracy out of sample. So how accurate is the model outside of the sample in real world application? A model that is very accurate will be said to be generalizing well. So a model that generalizes well is generating good forecast. That's the idea. And again, we are looking not within sample, but we are looking at outside of the sample in real world application. So one big reason why a model may look good within sample, but performs poorly outside of the sample is overfitting. Overfitting is basically including too many features, too high a dimension in the model. So overfitting occurs when the algorithm has been installed too closely with the training data. So the model is basically remember, now we are no longer concerned only with linear ones, right? So the model is trying to explain every single nuance or variation in the in the dependent variable, the target variable, and then you realize, you know what, some of the variation was simply noise or randomness. Economic data, financial data has randomness, has noise component, and I don't want to I don't want to model that noise. Why? Because noise, by its very definition, is random. So within sample, whatever noise that occurred will not occur outside of the sample. Your model is trying to fit the noise, and it will basically lead to lousy results outside of the sample because the randomness is not repeatable or is not present in the out of sample data. So outside of the training sample,
It's not
unfamiliar
gonna
data,
perform
the
well.
model
Yeah.
does poorly because of what is called as overfitting. Overfitting again is a result of inclusion of too many features, and the model becomes too complex. So higher complexity model does not necessarily mean better model. Now, model training approaches. First, we divide our data set into three components. The training sample, which is used to train the model in the context of multiple regression, think of it as estimating the slope coefficients. Validation sample is simply to validate or fine-tune the model. We tweak our estimates based on what we find, based on how the model performs in the validation sample. So this is all, the first two are what is called in-sample. So we already have that data when we are constructing the model in the first place. Test sample is outside of the training data. It is called out of sample, and that is where we evaluate the model's performance, the predictions. Now, there are three kinds of errors performing. The predictions. Now, there are three kinds of errors in machine learning algorithms. The first one is the bias error. Bias error basically captures how accurately the model performs within the training data. So how the model explains the variation in the training data. The variance error is how the model's performance changes in response to additional samples that are introduced to the model for validation purposes. So when you're using overfitting or when you have an overfitted model, what happens is your training model bias error may be low, but your variance error will be high.
Okay.
And then the Bayes error is simply originates from the noise or randomness of the data that cannot be eliminated. So there is a trade-off between bias and variance. More complex models will have lower bias error, but then will have a higher variance error. So here is a graphical representation of the learning. Learning curve is basically plot of accuracy, which is 1 minus the error rate. And so you have a desired accuracy rate, and that is not assigned a predefined value, but it depends on how much noise or randomness or base error there is. So you don't want the model to you don't want your model to include or start modeling noise or randomness in the data. So as you increase your training sample, one of the things you'll notice that the training accuracy rate will decline. So your model may be very good at the initial training sample. As you increase the number of samples, it will decline, which is perfectly fine. You don't want it to model the randomness in the data, so it will converge at some point as you increase the number of samples. Now, the validation accuracy rate will correspondingly improve as you increase your number of validation samples as the model gets fine-tuned. So in the first panel, what you see is high bias error. So high bias error, where the model is not validating well outside of the sample. In fact, the accuracy rate within and outside is too low. High variance error, where the model is doing well within the sample, but performing poorly outside of the sample or in validation samples. outside of the sample, it is not as well, not performing. So a good trade-off will converge the training accuracy rate and the validation accuracy rate towards the desired accuracy rate. So that is the key takeaway. We want a model to do well in terms of forecast, but it should not be trying to forecast randomness or noise in the data. Now, to get an overfitted supervised machine learning algorithm, there are two approaches. One is simply using the obvious solution. This is Occam's razor, where the obvious solution is probably the simplest one, and that is simply introduce an overfitting penalty. So you make the model less complex. So you reduce the dimension of the model, you reduce the set of features that are included in the model by introducing a penalty. So the model specifically assigns a penalty for a higher number of features, and that reduces the number of features or reduces the complexity of the model. The second one is cross-validation, and this arises on account of sampling bias. So what happens is you have a sample which may not be representative of the true characteristic of whatever data that you are trying to model. So when you have a sample and you want to make it representative, you want to have a large validation sample as well, which may not be very possible. So because of the sample size limitation, a larger sample becomes more representative, but we don't have a large enough sample. So we use what is called as cross-validation, and I'll explain to you in a second what is cross-validation. But we don't have a large enough sample, so we use what is called as cross-validation, and I'll explain to you in a second what is cross. Cross-validation. So cross-validation, an example here is a k-fold cross-validation, where k is a parameter, typically 5 or 10, that is assigned a value of 5 or 10. So what you do is you shuffle the data randomly and then divide the sample into k parts. So you start out with 500 observation, k equal to 5, you basically come up with 5 samples of 100 observations each. Now, for our samples are then used as training samples to train the data to estimate the model parameters. One sample is used as a validation sample. Now you do this k times. Repeat. K times. So 5 or 10 times, depending on what you assign the value of k. And you repeat this. Again, you start out with a freshly shuffled data set, again divided into 5 or 10 subsamples, and then use k minus 1 samples for training and the remaining one for validation. Now the error in each of these iteration is then averaged. So average validation error is then used as a proxy for auto-sample error. So we use that as a reasonable proxy of how the model is expected to perform outside of our sample. So that is the cross-validation approach to try to figure out if our model is doing good or modeling noise or not. All right, let's look at a example again from the curriculum. You are given Shreya Anand is a portfolio manager. Is basically trying to classify companies in Nifty index. There are 200 companies in that index, and you want to classify into 2 categories: those that are expected to announce an increase in dividend versus those that are not expected to announce an increase in dividend. So you start out. She starts out with 1,000 observations. So remember, these are 200 companies, but perhaps it is collected annually over the last 5 years or whatever it is, and you have a target variable dividend increase or not increase. So there are some years in which 10 out of the 200 companies may have announced an increase in dividend, and the remaining whatever number of companies have not, and they are tagged or labeled as such. So she includes 25 features. Those are fundamental and technical, and uses this data set to do a classification problem, basically categories of increase versus no increase in dividend. Now, after training the model, what she finds is that, yeah, in the training data, the model does well. However, it does not perform well on new data, auto-sample data in real-world application. So she then talks to her colleagues about what is going on. So you are given 3 statements. These 3 statements specifically are answering one question she put: what constitutes good generalization? So what is the definition of good generalization? That's the 3 statements are all about. Statement 1 says the model retains its explanatory power. If it is good, if it generalizes well, then it retains its explanatory power using auto-sample data. That is a good way to describe good generalization in a model. Statement 2 says the model shows low explanatory power after training using in-sample data. So statement 2 is incorrect. That would not be descriptive of good generalization in a model. It is doing poorly outside a sample. Well, that model does not generalize well. Statement 3 says the model loses its explanatory power. Again, the same thing. Outside a sample, poor performance. That is not a good generalizing model or well generalizing model. So statement 1 is a good description of what constitutes good generalization. The other statements don't. And that is your first multiple choice question included within this item set. So which statement is most accurate? Obviously statement 1, as we already went over. The next question is, Anand's model is most likely being impaired by which of the following? Is there overfitting and bias error? Remember, bias error is within sample, and we are given that the model performs well within sample. So that is not true. And similarly, overfitting and bias error is also not true because, again, within sample error is good.
It has to be overfitting and variance.
The model performs well. In other words, bias error is low. Overfitting and variance error is what the concern is for Anand's model. Now, the next question is, by implementing which of the following actions can Anand address the problem about overfitting? Choice A says estimate and incorporate into the model a penalty. So remember, we have 2 approaches to address overfitting. You have a penalty, and the other one is cross-validation. So here we are talking about a penalty, but we have to read the statement carefully. The penalty decreases with the size and number of included features.
No.
That part is wrong.
Increase.
The penalty should increase with the model complexity. So choice A tries to sell itself very hard, but it is not the correct choice. It is a distractor. Choice B says use k-fold cross-validation to estimate the model's auto-sample error and then adjust the model accordingly. And that is accurate. That is correct. Choice C says use an unsupervised learning model. Well, unsupervised does not have labeled training data. It does not have a target variable. Here, the problem at hand is to be able to identify which companies are going to increase dividend versus not.
So you want labels.
You want a supervised learning model, not an unsupervised learning model. So choice B is indeed your correct answer.
We're gonna do a quiz. Then I need to go make coffee.
Hello friends and welcome back. We are now ready to talk about the types of supervised learning algorithms. And supervised means we are providing the model with labeled training data. In other words, the target variable or the Y variable is identified in the problem we are trying to address.
Just need to make some coffee. I'm not wearing pants. I just want to sit comfortably first. Cool. Let's get it.
So the learning outcome statement, normally I don't spend time on reading the learning outcome statement because you can read it yourself, pretty straightforward. However, I want to focus on specific thing here in this LOS, and it basically talks about describe. So we are only looking at superficially addressing, understanding types of supervised learning algos, but, and there are six of them, and we'll see it in the next slide. But the main thing here is determine the problems for which they are best suited. And this is where I feel the exam questions would be addressed. So you are given a specific problem and you are asked to choose from approaches to solve that problem. And that is what the curriculum writers are really getting to. All right, so six types of supervised learning algorithms addressed by this LOS, this module. And the first one is penalized regression. This applies where you have a continuous target variable or continuous y variable where the values are not preordained. And then when your y variable is categorical, classification type issue, then you have the next five approaches, next five algorithms. So penalized regression is nothing other than your standard plain vanilla regression, except that there is a penalty incorporated for dimension reduction. Dimension reduction means what? Reduction in the number of features or the complexity of the model. We'll talk more about that right now. One type of penalized regression is the lasso. That's the one that is specifically addressed in the curriculum. Lasso stands for least absolute shrinkage and selection operator. So it is a popular type of penalized regression, and the researcher, the analyst that is using this algorithm will specify a penalty term. Higher the penalty term, more dimension reduction that the researcher.
Thanks, Itumiling. No iPhones here.
with the number of features included. The penalty increases with the number of features. So our objective, or the objective that you are specifying to the machine, is to reduce that penalty. And so what ends up happening is higher the penalty term, lower the number of features that the machine is going to optimize. So the trade-off here, that why have 3 features versus 35 features? The trade-off is the particular feature that you are going to include in your model needs to add adequate contribution in explanatory power. That explanatory power is captured by lower sum of squared error, which we already saw in multiple regression. So the idea is, again, there is a reward, there is a benefit of including a specific feature or X variable, and that is that X variable lowers the SSE as compared to not including that in the model. And how much reduction is there in SSE vis-a-vis the penalty, which again, the penalty term is specified by the researcher. Another approach is called as regularization. Again, we are not getting into the depth of the material. We are not trying to be a quant jock. We are trying to understand the terms that are used in common usage, so that as an analyst, when you talk to a quant jock, you are at least appearing to be reasonably well informed. Parsimonious model, meaning fewer features. Parsimonious stands for stingy. So in this context, stingy does not necessarily mean being stingy in your budget, but rather stingy in terms of model development, stingy in terms of choosing the number of features to be included in your model. So fewer features is more parsimonious model. The second supervised learning algorithm is support vector machine. This is a classification algorithm. So what it does is it takes a linear plane that divides the data set into 2 parts, 2 or more parts, but 2 parts, think of it. It finds an optimal hyperplane that separates the data into 2 parts, and it looks at commonality of characteristic based on as described by features for those observations. Features again are X variable. So you have 2 data sets with common. Characteristics, common features, not common characteristic, but common X variables, so debt to equity ratio and all those things, that wonderful things that we use in describing a company's financial characteristics. And then we divide it into 2 planes, those that are likely to default versus those that are not likely to default. So SVM is often used for bond classification, sentiment classification, for evaluating investor sentiment behind a specific stock, for example, or sentiment classification based on analysis of textual data. So again, remember, as I said, usage of each of these algorithms is important. So understand, recognize this is what you are focusing on as far as each of these algorithms are concerned. The next one is K nearest neighbor. K is a parameter hyper. hyperparameter, labeled as a hyperparameter, which is specified by the researcher. Hyperparameter means coming outside of the model. It is not derived from within the model by the machine. So the researcher specifies what the value of K is. And the machine then goes about selecting, taking one observation and assigning it to or grouping it with similar K observation. So if the K is equal to 5, the algorithm will look at 5 nearest neighbors. When I look at this in the context of a two-dimensional space, it is easy to visualize, a scatter plot, x versus y variable, and then assigning them in sort of a cluster as close as possible to other phi observation. But remember, machine learning is typically employed, and so does multiple regression. There are more than one features or more than one x variable, so it becomes multi-dimensional space. So it's kind of difficult to visualize, but think of it as observations that are similar to other observations get clustered together. Now the applications, again, very important for the exam, is predictions of bankruptcy, bond rating classification, and even stock prices. So let's look at an example how get clustered together. Now the applications, again, very important for the exam, is predictions of bankruptcy, bond rating classification, and even stock prices. So let's look at an example how this could be tested. So you are given Rachel Lee is a fixed income portfolio manager, and they are managing investment grade bonds. There is a upcoming straight 10-year fixed coupon bond with senior credit analyst Mark Watson. They believe that the bond should get a low investment grade or non-investment grade classification. Now Rachel, decides to double check this, use machine learning methods to confirm this, and both applies two algorithms. We are not specifically identifying the two algorithms in the vignette, in the story that is given to us. So Lee basically uses two algorithms. They both support non-investment grade. Again, remember we started out with non-investment grade. There is low or high non-investment grade rating that Watson is assigning, and it is unsure about. Watson being the senior credit analyst. So Watson is talking about low investment grade, and the other one is non-investment grade. And Lee's conjecture or machine learning approaches tells them no, it should be non-investment grade. So question number one is state the type of problem being addressed by Lee. Now this is not an exam question, and therefore it is not in multiple choice. This is from the curriculum. This is an example by the curriculum. So first we identify the problem. So Lee is addressing a supervised learning classification. Again, if it is given in multiple choice, that would be one of my answer choices, supervised versus non-supervised. And in this case, it is a classification problem, not a regression problem. And you are basically determining what credit rating to use. So that is the type of problem that is being addressed by Lee. The second question is, state the two algorithms that Lee could use to explore. So now we have to identify the two algorithms. Given the fact that we are putting this example where it is, we only address two specific supervised learning algorithms that focus on classification. And those are the SVM and KNN. And indeed, those are the two. So SVM is a linear classifier. That linear means that it is a plane as opposed to a curve. that finds that optimal hyperplane that divides the two data sets into distinct places. And then Lee would then note on which side or which classification that is being assigned to the new bond that we are talking about to determine their classification. The second type, we already talked about KNN, and again, those are the two classification supervised learning algorithms that we have covered up until now. And the second one is KNN. It is also suitable because it allows you to identify those observations to which this specific bond issue is close to. If it is very close to those that are investment grade bonds, again, depends on classification, but that allows us to determine, well, more likely to be classified as a investment grade bond. Now we move on to the fourth type of supervised learning algorithm. And that is the classification and regression tree. CART is a short form and is very popular in finance. Uh, it is used to forecast whether a categorical target variable, remember your y variable is categorical, assigned to a category, or a continuous target variable, y variable is continuous, takes on any value, in which case we use the regression approach. Binary card algorithms divide the data until the terminal nodes are reached, and the main implication or usage of card is looking for fraudulent financial statements. So when you are looking at analyzing a company and you're looking at the quality of financial statements, quality of accounting data, and card can be used to identify whether the company is potentially committing fraud, where there is red flags based on interlinkages between different items within the financial financial statements. So there are certain items in income statement, certain items in balance sheet, certain items in cash flow statements. And when the model finds inconsistencies between those items, it may be grouped into potential fraudulent financial statement category. So the next one is ensemble learning. Ensemble learning is recognizing that individual models have a prediction error, have their own prediction error, but that prediction error is random by definition. Whenever we looked at all the error terms in multiple regression, in time series analysis, and anywhere else, we say error term is random, noise, and expected value is zero. And if it is random, then individual models' error terms are not correlated. And so if one model has a certain error term and you combine the prediction from multiple models, perhaps you get more robust findings. And that is the idea behind ensemble learning. So we are basically reducing the noise in the prediction. So generally speaking, ensemble learning produces predictions that are more stable and more accurate. The next classification speaking, ensemble learning produces predictions that are more stable and more accurate. The next classification algorithm is random forest. So basically, forest is an assembly of trees. Again, using the concept of using multiple models. Here, we use what is called as a bagging method. In bagging, the original data set, or the training data set, is used to generate n new training sets or bags of data. And how do you do that? Well, you generate a bag by random sampling with the replacement. So you start with 1,000 observations, you randomly select 50, right? So that becomes your first bag. The next bag, you put those 50 that you sampled back into the original data set. So you again start with 1,000, again randomly select 50. That becomes the second bag. So each bag is randomly selected from the original data set, and it allows us to basically run the model multiple times using the same data set. Allows us to develop a model. multiple times to using the same data set. It improves the stability of prediction. So again, because of the fact that the noise factor, the error factor is random, we can on average lower it, and it allows us to improve the predictions from the model. Again, the investment applications of that model include factor-based asset allocation, identification of common factors, common drivers of return. So if if you remember capital asset pricing model from level one, capital CAPM uses a single factor, and that is the excess market return minus the risk-free rate. So the market was the factor in that single factor capital asset pricing model. Then we also talked about arbitrage pricing theory, which did not limit the number of factors. So there are more than a few factors. In fact, Fama and French came up with the three-factor model that they demonstrated empirically that were statistically significant in explaining cross-sectional return. So in a multi-factor model, it allows me to identify which factors.
Oh, I sold my iPhone to my cousin actually. This isn't really a Mobicel, but my lighting is bad. It's a Redmi Note 10 Pro. I'll show you why I bought it. So I have this cable. Um, it's just a volcano cable. So on this side, it takes a USB, and then on this side, it takes the Type C. Then this is a USB. So together there were like 300, 350 from Incredible Connection. So I can easily transfer videos from my phone to here. So my phone actually takes really good quality videos um, on the back camera and when the lighting is right. So for my YouTube, this is a much easier combination to get stuff onto my PC. Whereas when I had the Apple, I would have to download the link on iCloud and wait and wait and wait. And I was like paying a lot for storage. It was just too much. And this is 2000 Rand for an iPhone, but it's like 300, 350 Rand for an Android. That's one. The other reason is I had a store at the Kota Festival and I needed to use an Ikoka machine. So that machine only works with Android. So I was like, okay, I need an Android. And then I was also playing around with the idea of registering on these delivery apps so that I've got context. I was probably going to do like very few deliveries, like one or two just a weekend, because I like getting stuck into something before I invest in it. And for that, I would also need an Android. So for me, I was like, because I bought the phone cash when I was going to the Seychelles. I think it was for my 29th. So 20, like 2 years ago. Yeah, so 2023 December. So I bought it in October or November. I bought it cash. I mean, I was gifted e-bucks from FNB at the time. It was a staff award thing. So I got 25,000 e-bucks. I spent 8,000 on a flight, a return flight to the Seychelles, and then for about 14, I had to top up a bit. I bought the iPhone. So I'd had it for about 2 years now, or a year and a half, and yeah, I just sold it. And then I bought this. This was like 6K. So yeah, I just bought this. I sold it to my cousin for like 8K. And then I bought this. I think where I am in life and the things I want to do just needed an Android.
Are important in driving which stock. And in a factor-based asset allocation, I'm trying to diversify, so I don't want all my assets to be exposed to the same set of factors. It also can be used in IPO investment strategies where we are basically looking at a stock that is yet to go public and determining whether it's going to be a success or a bust. So on an ex ante basis, before it starts trading, we are able to identify which IPO to invest in. comprehensive example that talks about application of what we just learned, how it is testable. So Lori Kim is a portfolio manager at Hilux LLC. It's a bond investment firm. So based on Kim's analysis, she determines that credit quality range of medium range BB2 to triple C CA2 are most attractive credit spreads available to us right now based on the current market condition, high yield bonds. And she must carefully select the bonds to buy because she doesn't want to buy ones that are at elevated default risk. So that is the concern that she wants to address using machine learning algorithms. To help with the bond selection, Kim turns to the company's data team, the quant jocks, and Kim has supplied them with historical data consisting of 19 fundamental and 5 technical. So these are the features or X variables that are supplied by Kim for thousands of high yield bond issuers, and they are clearly labeled. In other words, the Y variable or target variable is identified as defaulted or not defaulted.
So it's supervised.
So it is structured learning, and you are given that Kim is asking the quant jocks to help a machine learning based model to classify the data. So exploratory data analysis suggests that considerable non-linearities exist in the feature set. And again, obviously non-linearities means what? You don't want to use a linear model. So the first question is, state the problem that is being addressed by Kim. So the problem is, it's a simple classification problem to segregate the data set that is supplied by Kim into those that will default versus not default. The second question is, describe the dimensionality of the model. So dimensionality means the number of features included, and we already are given
19 and 5,
19
so 24.
fundamental and 5 technical. So it means there are 24 total features that are included in the model before any reduction is applied, any reduction algorithm is applied. The third question is whether a CART model is appropriate for this problem.
Classification.
The CART model is useful for a classification problem.
And you can do binary.
Because there is non-linearities and CART model is able to handle non-linearities, it would be an appropriate good choice to handle the modeling problem at hand. And an important advantage of CART is the results are easier to interpret, visualize and interpret. And therefore Kim can use or leverage the output of the model to explain the recommendation to the clients. The last question is, describe how a CART model operates at each node of the classification and regression tree. There is a tree and there is a classification. At each node, the algorithm will feature, we choose the feature, the cutoff value for a selected, for the selected feature that basically maximizes the classification distance between two sets. So it basically allows for minimization of the classification error. So that is just a quality. These are not multiple choice questions, but it can be used, can be repurposed into multiple choice to highlight.
Wait, at each node in the decision tree, the algo will choose the feature and the cutoff value for the selected feature that generates the wider separation of the labeled data to minimize classification error. Okay.
How this material can be tested. All right, keep up the good work.
Okay. Should I do this last one? Or should I go to quizzes? Oh, I'm nearly finished with what's her name. Okay, we're gonna do a little quiz. Then okay, let's go. Yeah, my lighting is bad, and my what's the name? My phone is bad. Okay. A regression linear model that focuses on reduction of the total number is best described as a generalized regression model. A machine learning technique that can be applied to predict either categorical or continuous, that's CART, classification and regression tree. An algo to assign a bond to a credit rating is least likely to use clustering, classification, and regression. That is for categorical. K nearest neighbor, yes. A bond rating, classification, and regression, yes, you would. K nearest neighbor. Actually, don't know. Oh, labeled. It would be supervised. So CART is supervised. KNN is also supervised. Whereas clustering is unsupervised. I would say clustering, but I'm not sure about that one. Fixed income analyst is designing a model to categorize bonds into one of 5 ratings classifications. The analyst uses 12 fundamental variables and 2 technical variables to help her in the task. The number of features used by the analyst is closest to 14, obviously. Ooh, I got 100%. Let me just check the third one. Yeah. Yes, that's exactly what I thought. That is perfect. No corrections needed. Okay. 3.3. Did I do this one? Oh.
Okay, friends, welcome back. And now we are ready to talk about unsupervised learning algorithms. And fortunately, there are only 3 of these. Remember, unsupervised does not use labeled training data. So the training data is unlabeled. In other words, we have no clearly defined y variable for unsupervised learning. Now, as I mentioned, only 3 algorithms. The first one is principal components analysis. Then the next one is k-means clustering and hierarchical clustering. Now, the applications of these clustering is to potentially find out exposure to specific types of risk. So, for example, when we use our golden word in finance about diversification, we try to diversify based on market cap or diversify based on the industry in which the company operates. But sometimes the true diversification is masked because even if the companies are operating in different industries, they may have similar risk exposures. So to really gain the advantage from diversification, we may want to go beyond superficial classification and perhaps use these machine learning approaches to assign categories for similar observations so that we can sample, say, for example, two companies from each cluster, and that becomes a diversified portfolio. All right, so let's talk about the principal component analysis first. PCA was originally used in finance in development of arbitrage pricing theory or arbitrage pricing model. So Richard Roll and Stephen Ross, they basically said there is more than one factor. Remember, original
Niche's variance.
Asset pricing model was the capital asset pricing model, which had a market portfolio, and that was the only risk that was priced by the market, the systematic risk. And under arbitrage pricing theory, there are more than one factors, and it depends on times. So principal components are basically combining a set of features using a linear equation. So think of it as a simple weighted average. You combine 10 dimensions into one principal component. Each model creates eigenvectors, which are uncorrelated with other eigenvectors, and also specifies eigenvalues, which tell you the proportionality of variance that is explained by each of those eigenvectors. Here the purpose is we have a feature covariance matrix. So your covariance matrix between, say, for example, 100 different companies, and you'll want to find out which are the factors that drives the returns of those 100 companies. And you can find out the principal components, and that will give you an idea about what those factors are. However, it is a black box approach because each individual factor is not labeled. In other words, we don't really know what those factors are. So you can't actually use it in hedging purposes or portfolio management purposes. All right, the next one is K-means clustering. K is the height. number parameter that is specified by the researcher, and it basically tells the model, the machine, to divide the observation pool into K clusters. So let's say K is equal to 10, then we are basically taking the observation pool and putting it into 10 categories, 10 clusters. Each cluster is then described by a centroid, which is basically capturing the middle point of that pool of that cluster. So there is an assignment of observations to different clusters based on nearness to those centroids. The next one is hierarchical clustering. It can be top down or bottom up. If you do bottom up, then basically you start with the entire pool, and then each observation is considered its own cluster, and then those clusters get larger and larger. As you reassign observations from its own cluster to other clusters. In a top-down clustering approach, you start with the whole pool as one giant cluster, and then you keep on dividing it into smaller and smaller pieces depending on dissimilarities between different groups. Now, this is an example from the curriculum. It basically kind of tells us the type of information we need to really take away, because we recognize that we are learning this content on a very shallow basis. So our main objective is, how do I use this in finance, in portfolio management, in investment management? So what you're given is, there is a portfolio manager who has who is managing a portfolio for a fund, and the fund is benchmarked relative to stocks Euro 600 index. And that index covers 17 countries, 19 industry sectors, and 3 market cap groupings. So what you're given is, well, based on the fund's performance, the Perenier is concerned that the fund's holding, although it appears to be aligned with the index composition, they may have unrecognized biases. So you want to identify those biases, those risk biases within the fund's portfolio. So the 3 suggestions given to you here is: estimate the country, industry, and market cap exposures for each of the holdings of the fund aggregate them and compare them, that aggregate value, to the benchmarks weights or exposures. Suggestion two is identify inherent groupings among the fund's holdings based on 8 numerical measures. So basically, these 8 are a set of features, if you will, or X variables. Keep in mind, we are dealing with unsupervised learning, so there is no Y variable. And then examine the groupings. So we are basically giving the computer 8 features for each observation included in your fund's investment pool, and then identifying the groupings, the machine doing the grouping to identify any unexpected biases or concentration. And then finally, regress the return of the fund on a country equity market indices. So you have different indices as your X variable and return on the fund as your Y variable. So that becomes a supervised learning algorithm. And examine the coefficients vis-a-vis what the benchmark coefficient should be. So Lund has several questions for the analyst Greg Kane about using one or more clustering machine learning algorithms, and is wondering what information needs to be specified for the machine learning algorithm, the clustering algorithms. So Kane replies only the hyperparameter K needs to be specified for if you are going to use K-means clustering. And a follow-up question basically says whether there would be an advantage to using K-means clustering as opposed to hierarchical clustering. Kane replies that in his opinion, hierarchical clustering is the most appropriate algorithm to use in this instance. All right, so that is what is given to us in the vignette, in the item set, the story behind the questions that follow. Now we have 4 questions using the information just given to us in the vignette. Question number 1 is, which analyst suggestion is most likely to be implemented using machine learning? I would, this is from the curriculum, but I think what the author is really talking about is unsupervised learning, or so you should specify unsupervised or clustering. And so I go back to the 3 suggestions, and we already know suggestion 2 is basically a textbook example of clustering. So suggestion 2 is your correct answer. All right. Next one is Kane's reply to the first question about specification of clustering model. So remember, the first question was, is there any need for additional set of information to be provided to the machine? And Kane's response was, yeah, you have to give the machine the value of the hyperparameter K. Is that correct? Well, it is partly correct, but in addition to it, for each observation, you need to provide the machine with a set of information so that that information can be used in determining how the clustering actually occurs. So it is not correct because the feature set of variables, and in suggestion 2, we already talk about operating and financial metrics were specified so as to determine which group that an observation should belong to, just not based on the company's name or ticker symbol. The third question is best justification for Kane's preference for hierarchical clustering as opposed to K-means clustering is because hierarchical clustering does not need the hyperparameter K. And the last question is hierarchical clustering is best described as a technique in which the grouping of observation is unsupervised. Indeed, it is unsupervised learning, and that is your correct answer. So there is no pre-specification of hyperparameter K for hierarchical clustering. That is K-means clustering. And observations are not classified based on predetermined label because
it's
if
unsupervised.
it was, that would be supervised learning.
Yep.
Now the last component here, there used to be a learning outcome statement assigned to it, which was removed. So technically, I don't think it is really testable, the content as it pertains to neural networks, deep learning network, and reinforcement learning. But briefly, neural networks on a very, very, very shallow presentation would be basically comprising 3 layers: input layer, hidden layer, and output layer. So the hidden layers can be multiple layers, and all the calculations occurs in this hidden layer where an input gets fed to the network, and there is some processing applied to it, and that's how you get to the output. Neural networks are useful when you have more complex problems and the data has significant DLN, deep learning nets, are basically nothing other than neural nets, but it has many, many, many hidden layers. So if you think of it as more complex neural networks are called deep learning nets. And now they are the backbone of artificial intelligence. So it is useful for pattern, image, and speech recognition, large language models, and so forth. And reinforcement learning has intelligence. So it is useful for pattern, image, and speech recognition, large language models, and so forth. And reinforcement learning has a reward mechanism built in. So it is kind of an opposite to penalty. So if there is a mistake, you are penalized. Well, conversely, if you're correct, there is a reward. And the objective of this machine learning algorithm is to maximize the reward so as to ensure that over time your output is more and more accurate. So the learning occurs over time, and there is no immediate feedback or immediate instantaneous response or feedback because again learning takes time under reinforcement learning, repeated learning. Now, quickly, one example of neural network is let's describe a technique for machine learning that is, choices are exactly modeled on a human nervous system.
No.
Choice B is based on layers of node connected by links when the relationship amongst features are usually non-linear or
Yes.
complex.
Yes.
And that is indeed the correct answer. So that is it for the reading on machine learning. Once again, as usual, do plenty of practice questions so as to familiarize yourself, reinforce this learning, and keep up the good work.
Yay. Okay. I'm gonna do one last quiz. Then there's a question bank. Let me do a quiz. It's 10 minutes. Let's see if I have the question bank in me. Yeah. Image recognition problems are best suited for which category of machine learning algorithms? Hierarchical clustering, unsupervised learning, or deep learning? Deep learning. Which of the following is least likely? I like to highlight it when it says least. As a black box approach, principal components and analysis, classification trees, and random forests. So principal components analysis is definitely a black box approach. Classification trees and random forests. I would say classification trees. That's not a black box. An analyst wants to categorize an investment universe of 1,000 stocks into 10 dissimilar groups. The machine learning algorithm most suited for this task, I would say clustering. So it says regression, no, because that's not categorical. That's for continuous y variable. They've also got a card, which is a classification and regression tree, or clustering. I would use clustering. Got 100%. Okay. Yeah, then I'm done. Let me go do the reading 3 question bank. So it says 25 minutes and it's only 8 questions. So let's see. Considering the various supervised machine learning algos, a linear classifier that seeks the optimal hyperplane and is typically used for classification. Best describes SVM, support vector machine. The unsupervised machine learning algo that reduces highly correlated features into fewer uncorrelated composites, PCA. Dimension reduction most likely is an example of it's definitely supervised learning because you know what you're solving for. Which of the following about unsupervised learning is most accurate? There is no labeled data. That is true. Unsupervised learning has lower forecasting. No. Classification example of an unsupervised. No. Because what am I classifying it into? The degree to which a machine learning model retains its explanatory power when it's predicting out of sample is called variance area or generalization. A random forest is least likely to be a classification tree, reduce signal to noise ratio, provide a solution to overfitting problem. C. Which supervised learning model is most appropriate when the y variable is continuous? Regression. And when the y variable is categorical, classification. So B. A rudimentary way to think of machine learning algorithms is that they synthesize the pattern, review the pattern, develop the pattern, interpret the pattern, find the pattern, apply the pattern. C. Ooh, I got 75%. So dimension reduction is most likely to be an example of unsupervised learning. Okay, that I got wrong. Dimension reduction is an example of unsupervised learning. Random forest is a collection of randomly generated classification trees from the same dataset. A randomly selected subset of features is used in creating each tree, and hence each tree is slightly different from the others. Since each tree only uses a subset of features, random forest can mitigate the problem of overfitting. Because errors across different trees tend to cancel out, using random forest can increase the signal to noise ratio. Okay, that I didn't know. I've answered not a lot. Yeah, guys. Okay. Oh, I'm talking alone, so I'm gonna call it a night.